Thank you for tuning in. You're watching The Property Guide in ET Now. I'm Faye D'Souza. This is your one-stop guide to property investments in the country. If you have any feedback or questions about buying a home, write to us. Our email ID is at the bottom of your screen, and you can reach me personally on my Twitter account as well. Over the next half hour, we'll take a look at the outlook for the residential market in the second half of this financial year. We'll tell you if you should, in fact, be getting off the fence. Will REITs turn this market around? How long will it be before you and I can invest in REITs? That's coming up later on the show, and we'll answer questions you sent in about investments in Pune and Bangalore. Joining me in the studio, Sanjay Dutt, Executive Managing Director at Cushman Wakefield India, and Omar Huja, CEO of Residential Services at JLL India. Gentlemen, thank you so much for coming in. I'm so excited to have both of you here because it's quite a strong panel, and I always feel happy when we have a strong panel. Now, before we get into the discussion about the outlook for the second half of the year, I want to ask you about this. We're looking now at this next quarter is going to be a heavy quarter in terms of just sales and marketing for the real estate industry. So we're all now going to get mailers, we're all going to get emails, we'll get cold calls from people selling us property, and our newspapers are going to be full of full-page ads. I have this question for the both of you, and I'll start with you, Sanjay. There is no regulator in this market right now.
Yeah.
As far as customers are concerned, all we have is the consumer code. So if I see a full-page ad in a newspaper, or I get a mailer, or I see something on the internet, is there anything binding a developer to put out the real specifics of, the green spaces and the distance to the airport perhaps, or, any sort of the specification? There is obviously a tendency to embellish the details,
Sure.
But without a regulator, should I believe any of the stuff that's in this, that's in the advertisements?
So very interesting. So I do believe that any representation by the developer in writing or through a public ad means that you're representing certain facts about the development and pricing, amenities and many other things. If they've spelled it out and that's what you have experienced when you actually go and commit a buy decision to a property, then the developer is very much accountable. Okay. I also believe that last few years, given the precedents that have happened and the judgments that have gone in favor of the buyer, where the developers have promised but not delivered or conveyed but not delivered, they've been actually severe, judgments against the developers. And secondly, I think the developers themselves have become conscious because last 3 years selling was not easy. And if they were to ruin their reputation, that would further jeopardize whatever hope they had for selling. So I think that while there may not be a regulator, but there is enough conviction on part of developer to adhere to the extent possible. And while they may not spell it out in detail in as-built drawings to the consumer, there may be certain gaps and loopholes, but major deliverables and major commitments, I think, would be protected and the customer's interest would be protected. However, that can only be challenged by going to the court and the consumer court. And therefore, there is big concern whether customers are, open to that route or not. So there is this problem.
Well, obviously, I can physically measure the distance between the airport or the main road or the freeway to the property in question. And we can, of course, now we know, put down details like carpet area, super built-up area, that sort of thing. We cannot put down details like the size of the swimming pool or the play area or the green spaces that this complex is going to have. So as a customer, if I'm getting in at this point, how can I make sure that, is it the choice of the builder here? Is it the watertight contract? How can we protect ourselves?
Well, I would say the best way to do is look at the past track record of the developer. That's the only way you can actually look at what has he committed and what has he delivered. It will be very difficult, as rightly said by Sanjay, that is very difficult at this point of time to see that, what you can actually make a developer deliver. But past track record helps. And second important point is when you're basically going with the right kind of developer with good track record, it gives you the comfort.
All right. So basically the consensus is then that you have to do your own homework, do a lot of research. Don't go by anything you see in the newspapers, in those advertisements, or on the internet. It's all up to you, really, to do your own homework right now. All right. Let's move on to the big question we're asking today. Now, we've had several conversations about the fact that in all of our cities, the unsold inventory is piling up, which means there are apartments that are ready or they're on their way to being ready, but nobody's bought them. And even if we see an uptick in sales in the next 3 months or the next quarter or so, There's already so much unsold inventory. What will that mean for our investments? This is the question we're asking. What is the outlook now for the rest of the year? Sanjay, there was a lot of talk about a turnaround in this market. We haven't seen that turnaround. Now we understand from the ground that apparently builders are starting to rationalize their expectations for festive season sales as well. Yeah. Tell us what your outlook is at Cushman & Wakefield for the rest of the financial year.
So I certainly think the developers will seize the opportunity of positive sentiments overall by the new government, even though in reality the hard details on the ground may not reflect that as an economy or the growth of the economy.
But technically nothing has changed.
Nothing has changed. In fact, the pain still remains. In fact, some of the developers are through the last stages of the pain, so it's very painful. I also think after a gap of 3 years, the job sentiments will be better in 2015, and that will get captured by the salary increments that will happen between Jan to March, where I think there's a belief that you will see some double-digit increments, and that will give a lot of boost to the consumers and the people who will feel secure because there is some hope and growth that is expected. It will only be captured around that time.
Well, JLL in one report said you are expecting an uptake in commercial space in some cities. And like we've talked about in the past, commercial space has a direct impact then on residential space as well. So how soon do you expect that uptick to begin? And in which cities are you expecting it?
Well, we're already seeing this impact in terms of, there's a pickup in terms of demand, specifically when it comes to commercial. And what we've seen is the way IPO market has performed. In the last few months, we've seen IPO market getting revived. That's a big boost for the economy when it comes to fundraising. Most corporates which have raised money have also delivered in terms of money, in terms of growth for their investors. Then we've seen car sales picking up. We've seen hotel sales, hotel room sales showing uptrend. All these things put together, what we are seeing is some markets, we've seen revival in terms of demand when it comes to both commercial as well as residential.
Tell us what markets these are that you're talking about. Name the cities for us.
Let's start with Mumbai. Mumbai city per se, if you look at specifically when it comes to from Bandra to Andheri, there is a lot more demand than supply what is coming in there. So that's a market which looks very safe at this point of time. When you look at extended suburbs of Mumbai, that is eastern suburbs, that's almost 20 to 15% cheaper than western suburbs today, considering the kind of infrastructure what has come in eastern suburbs, right from Chembur to Thane. That's a sector looks to me a little more safer at this point of time in terms of demand and supply point of view. Look at Delhi per se again. Delhi again, we're seeing this slowly coming out of stagnation which was there. Now hopefully with this Haryana elections now getting over, Gurgaon should also see revival. Okay. And Bangalore continues to be a very robust market. Pune continues to be showing the signs of revival. Most pockets of Pune, East Pune is seriously showing kind of revival which is there. West Pune is slowly now seeing that East Pune getting now completely filled in terms of there's no supply in terms of commercial which is available, which can be lapped up. So Western Pune is actually taking that benefit at this point of time. So we're seeing that spilling over in terms of demand for residential there too. And only Chennai is a city where we've seen recent political development. That's at this point of time, it's better to wait and watch what's happening. But there is a pickup in Chennai too.
Well, Sanjay, tell me this. If you did say a little while ago that it's going to be a lot more painful before it gets better. So if I'm looking at making a pure investment at this point, I mean, it's another thing if I'm going to buy the home that I live in which case any time is a good time. But if I'm looking to make an investment, does it make sense then for me to wait a couple of more months when, the pain gets really sharp for the developers and I can get a better discount?
So yes and no, because certain markets, yes, it's possible. In most markets, I don't think so. So I think a lot of correction or alignment, rather not really severe correction, has already happened. And I think investment should be linked to quality of the project, credibility of the developer, right entry price, and outlook on the development and future potential beside the demand-supply dynamic.
For those of our viewers who already have investments in the cities we just talked about, are we just looking at a delayed revival here? In the meantime, while we wait, will rental returns start to improve a little bit?
Well, India has never been a rental return market as such. It's really very unfair to say that we will have a good coming years as rental years in terms of where rental yield will pick up and stuff like that. It's not a market. It's a market which is more capital appreciation related market. A lot more urbanization, a lot more people moving to cities, a lot more job creations. That is going to be driving the demand, specifically when it comes to residential sales. And what we see at this point of time is specifically what Sanjay mentioned, the markets. Chennai or Hyderabad or Bangalore are very, very conservative and very safe markets in terms of when it comes to demand. There's a lot more job creation in these three cities, and also then Pune and also in Gurgaon. So these are cities we continue to see appreciation considering the kind of urbanization which is continuing to grow there. The cities like Bombay and Delhi, which will be more related to what government is doing in terms of respective states as well as in terms of center. Lot more will demand will get generated, specifically when it comes to a lot more revival in the country. But other cities, considering the way rupee is behaving today, we see IT sector continuing to do well in next 2 to 3 years time, and that is going to have direct impact on the cities, specifically Chennai or Bangalore or Hyderabad or Pune or Gurgaon. So don't do timing. Rightly said, timing will only basically you will get that suddenly there is a change in terms of turnaround. We are looking at, it's like a stock market investment. So in stock market, you may be caught on the wrong side and you may see the markets moving up.
All right. I want to very quickly ask both of you this question. Chennai, Hyderabad, Bangalore, you both said Pune and Gurgaon. One of the questions we receive from our viewers on a regular basis is simply this. If I'm only doing an investment at this point, again, this is not a home for me to live in, should I be considering the older second sale inside of the city limits of these three cities that we just talked about? Or as an investment, does it make more sense to go towards the ring roads, the outer ring roads, where people are building larger townships sort of with the pool and the gym and the works? If I were to ask you to choose as an investment in these cities, which ones do you think would make more sense?
So investor who wants immediate investment means he's got capital, 100% to invest today. So if he wants to make full cash down payment, I would recommend within the city, good developments, secondary market, and the secondary market always gives you a price advantage over developer. If they happen to have another phase 2 or 3 to sell, you can actually extract more value from the secondary market.
You agree?
Fully, it's like something similar to what you have large cap and small caps in basically the stock market. City is a large cap. Technically, you can't go wrong. You will always be safe. The appreciation will be not too fast, but it will give you that safety in terms of what you're looking for. Outskirts of city are small caps or maybe micro caps, whatever you call it. So you can make multiples of higher multiples going forward, but it will take 5 to 10 years. If you're having that 5 to 10 year vision and you believe that this growth is going to go the way it is going, I think that also can be a good bet. But yes, there your capital requirement is smaller. City, your capital requirement will be higher.
All right. So the cities we talked about, Chennai, Hyderabad, Bangalore, Pune and Gurgaon. And of course, whether you should be looking at second sale or you should be looking at new developments. And remember, for those of you who are looking at second sales, taking a home loan becomes all the more difficult because you need to make sure that the person who's selling you that property has all of his papers all together. That takes a lot longer than buying directly from a developer. Welcome back. You're watching The Property Guide on ET Now. Thank you for staying with us. Now, both of our guests are still with us, helping us make smart investment decisions when buying property. Of course, there was a framework on the regulation of REITs that came out from SEBI. This is something that we've been all waiting for. It isn't very different from what we were expecting. Would you say this is a positive? How much longer is it going to be before we actually see REITs come through?
I believe while it is positive, but I think still 6 months to 12 months minimum before we actually see clarity strong enough to compel some of the seasoned, mature players to come and list. Although there are many eager on the wings waiting for come forward and do a REIT listing, but it's not clear enough yet.
How long do you go, if it is going to take about a year, obviously, then it is going to be even longer before the retail investor gets the opportunity to come in. But that aside, is REITs the solution to this market right now?
Well, I would say for a retail investor, getting into commercial property, buying something which is very difficult to lease, I think that's not the route to go for. For a retail investor, REIT becomes an alternative, which is he can participate in a larger asset and get the best tenant and the best benefit out of it.
I want to be very blunt with both of you, and I'm going to ask you this question. We are, acceptedly looking at a very strong stock market, at least over the next 5 years or so. And if I were to ask you, and there are various ways to invest in real estate right now. You can buy residential, you can buy commercial space like you talked about. REITs will be available to us soon. If I were to ask you to choose right now as an investor, as as an individual investor, between putting money in real estate over the next 5 to 10 years or putting money in the stock market, what would your choice be?
So I would reasonably divide between equity markets and real estate. I think there is an upside to be made, even though some valuations have already gone up. In medium term, in large caps and maybe in some mid caps. But take a short-term view of real estate, 2 to 4 years, and somehow find those investments where you can potentially exit in 3 to 4 years' time as well.
It takes 3 years' time to exit a property right now.
Exactly. So ready properties, or you can exit during completion, but those properties where you can actually trade or sell your investment. And I'm saying it largely because you will max the upside on real estate in next 2 to 3 years, at best 4 years. And therefore, from there on, I'm not so bullish. So I'm not so bullish from medium to long term on real estate. On equity, I would be.
Okay, all right. You agree?
Well, I would say there are a lot of 2080 schemes in the market today in the real estate space. That's where the developers are looking for velocity improvement in terms of how the sales can pick up. So I think a lot of smart investors today are doing good kind of allocation for 2080 schemes where they're seeing that okay, the product is getting developed. 3-4 years down the road, I will get the key. And 3 years hence, I will basically go to book my capital gains. So continue to believe that real estate will also do well in terms of real estate investment, specifically when it comes to 2080 schemes, where your risk is just limited to 20%.
All right. So be smart if you're making an investment right now. Pick the right scheme, and of course, take a look at real estate for the medium or the short term. That's something you should also discuss with your investment advisor before you go ahead and do anything about it. Let's take some questions. Anuj has written in. He wants to buy a project that's under construction as an investment in Panvel, delivery period of 4 to 5 years, budget of 1 crore rupees. Please give me some advice on the India Bulls Green project in Panvel. That project's been delayed a lot. Should he, at this price, go ahead with that particular project? Are there better options for him there?
I would say Panvel as a zone has a lot of supply coming in. Will be very difficult to say that what kind of appreciation one will see over 3 to 5 years period. One should be cautious when it comes to selecting Panvel. The prices have already moved up. I don't know how much more money one can make money. In the similar price or similar budget, in the similar package, you can actually look at a home in Kharghar. That's more safer area. And with the way things are going in Navi Mumbai, at least Navi Mumbai, there is a lot more job creation which is happening there. Panvel is already priced in terms of the upside.
All right. There's also, a little bird in the pipeline telling us that there might be a high-speed rail link between Navi Mumbai and VT coming soon. So that might be a good boost. But if he looks at the western side, and we talked about the fact that supply is low, but with a budget of 1 CR in a Borivali or a Kandivali, if he's looking purely as an investment, he can afford a 1-bedroom. Would that be a smarter decision? So
within the city limits, even 1 bedroom would be a smart decision, because metropolis mostly does attract a lot of migrant workforce, and there are many people who may not mind living in smaller units. As a family, obviously, if you have a medium-term view and you can stretch yourself, buying a 2-bedroom is always a wise decision.
All right. So if you're making an investment, then even a 1-bedroom inside the city might be smart. Both of our guests are giving you options. As Jacob has written in, he wants to buy a 3-bedroom duplex apartment, about 2,000 square feet in Pune with a budget of 1 to 1.4 crore rupees. Give me some advice on good projects at reasonable rates. Well, in Pune, you can hope for 2,000 square feet at 1.4 CR. Are there any options there for him?
There are good options one can look in Pune specifically. When it comes to his Park Express, bang opposite a new center of Cummins coming up there on the Bangalore Road. That's a good option to look at. In this budget, he can afford a 3-bedroom apartment there. And that gives you straight away appreciation in terms of when the Pune Cummins operation goes live, this complex is bang opposite the large complex of almost 1.5 million square feet. That will take the benefit straight in. And the second project you can look at is Song of Joy of Gera, again in Kharadi. That's a project one can actually look at in terms of benefits, amenities, and East Pune doing well. That takes a straight benefit in terms of employment creation which is happening in East Pune. All
right. So if you have questions about projects or buys that you're considering in the property market, write to us. Our email ID is at the bottom of your screen. Welcome back. You're watching the Property Guide on ET Now. Thank you for staying with us. Both of our guests are still with us, and we're going to answer a few more of the questions you sent in during the week. Manjunath has written in, he's planning to buy a 2-bedroom flat in Bangalore as an investment with a budget of 40 to 50 lakh rupees. Please suggest what area I can look at to give me a high return and also that have some good builders in that area. Sanjay, we've talked about Bangalore quite a lot, and I must be honest about the fact that almost 7 out of 10 of the emails that we get in our inbox are about Bangalore. Either people living there, people who want to buy there because they think it's a good investment market. The budget of 40 to 50 lakh would limit him in terms of options right now, but where can he go?
I think there are sufficient opportunities in Bangalore. So Bangalore is basically the center of the city and south toward Hosur, which has been a growth area for many years. But now the development and growth is on the outer ring road and Sarjapur road. That's one.
But he wouldn't be able to afford Sarjapur road.
Well, yeah, I agree with you. And then you have Whitefield, which has become a city of its own. And they could be, if you go deeper inside, there could be opportunities. But the most favorite, which I consider will probably give you higher multiples returns and will be closer to the infrastructure and airport and jobs, would be the Hebel and the Manyata IT Park, or behind, or a road parallel to the airport, which is
Tanisandra, Manyata
exactly.
Okay.
Those are the corridors where you would get these kind of opportunities. And there are many developers. You have Mantri, Purvankara, Salarpuria, who do create mid-side developments, but the amenities and the size of the project gives you a very good lifestyle.
All right. Om, do you agree?
Yeah, I completely agree with the recommendation in terms of Hebal, and that's a location to be made.
My only question, there are two problems there. One is there's no water. Secondly, there's a lot of supply. If you drive down those roads, it's just construction after construction, which is overwhelming even for Bangalore, isn't it?
Well, I would say there's the kind of new commercial complexes which are getting occupied or maybe considered, or maybe there's a lot more shift happening. That should actually create more employment there, and that will actually absorb a lot more supply coming in there. And I don't see a concern in all terms, in terms of there will be so much of supply and how will the demand come in. Demand factors are all being plugged in. And the two projects which I would recommend at this budget, one is there's a Provident product of on the Mysore Road, which is a product that comes in this budget, and he can look at that. And the other one is DNR Atmosphere in Whitefield. So these are the two projects which fit into the budget and have the potential to grow.
All right, we have a question from KB Prasad. He's invested in property in Kolaturu in North Chennai. He said it's a 1,200 square foot 2-bedroom apartment and he bought it in 2008, just before the recession. He wants to know if he should hold on to this investment or should he sell and look at another location. He has a time horizon of 15 years. What would you recommend he does?
I would say North Chennai per se has not too much of attraction in terms of demand. That's the zone which will stagnate, and it will be better considering the way things are going at this point of time in Chennai. OMR and ECR or GST are the three roads to be in when you're looking at futuristic investments, and these three roads will give that kind of demand which will come in once we see the momentum picking up in Chennai. So North Chennai, I would recommend that he can book his profit or whatever, he can exit from North Chennai and look at OMR or ECR or GST.
All right, let's quickly take another question. Jaideep has written in, he's looking to buy a 2- or 3-bedroom apartment in either Ahmedabad or Gandhinagar for a long-term investment. He has a budget of 35 to 40 lakh rupees. Please give me a good location. Well, there is, of course, the two cities and the road that connects the two. What would you recommend he looks at?
I think Circuit Gandhi Road has the Adani Township, which is already built and the infrastructure is already in place. You have Sports Academy built inside, so it's quite a product ahead of its time. And since the investor prefers anywhere between Ahmedabad and Gandhinagar, this being closer to Gandhinagar and was a good investment.
But the only fallback of, the only drawback of an investment that's ahead of its time is the 10-year wait that before anybody wants to live in that, part of the city.
While I know it is far from the city, but as an investment and considering the distance and the time it takes to commute to the city, it may still be, for a local in that market, it may be considered as a long distance. Yes. But if somebody is open to go to Gandhinagar and live, this actually is not a bad option.
All right, the details of that option are on your screen right now. If you have questions for either of our guests, write to us. Email ID is at the bottom of your screen. I'd love to hear from you too. My Twitter ID is on your screen right now. Om and Sanjay, thank you so much for spending time with us. It's been an absolute pleasure. Thank you so much for watching.